So explain what a 199A deduction is, and how can uh, contractor physicians use that?
The 199A deduction is called that because of the tax law where it's drawn from, the 199 Section A, also called the QBI, Qualified Business Income Deduction. And this was part of the tax package that was Congress passed back in 2017. They lowered the rate of corporate taxes on C corporations down from 35% to 21% to be in line with the rest of the world. And they also wanted to give a tax break to individuals too, S corporations, sole proprietors, business people, people that are self-employed. So what they did was they said you can take 20% of your business income and you can treat that as a deduction. You can essentially write that off against your business income. Take 20% and write it off. The downside to that for physicians is that Congress decided to phase it out for service professionals, which would be physicians, attorneys, real estate agents, accountants, people that don't build things, that just offer services. There are income limits to where that phases out. So the income limits are based upon your taxable income. So taxable is the lowest number. That's after your itemized deductions, your business expenses, your defined benefit plan. After everything, that's the lowest number you're taxed on. If you're filing married and your taxable is over 440, that deduction, you can't get any of it. If your taxable is below 340, you get all of it. And it phases out between 340 and 440, 1% per $1,000. So the name of the game, if you're a professional making about five or $600,000, is to put just enough in your DB plan to get your taxable income at or below the threshold to capture that 199A deduction. And now that 40% tax savings that the DB plan would be generating is bumped up to 50% tax savings because you're capturing that deduction.